Hi everyone, let's go over my medium time frame, low time frame, micro and local bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the medium time frame bearish scenario, where we are looking for an expanding flat to the downside, where now we're working on an impulsive wave C, where the most common target for wave C is between the two 1.618, which is between 23.4k and 22k. What is interesting is that on Bybit this low has been taken, but on many other charts, including mine over here, this low has not yet been taken. However, based on statistics I recorded in the past, the probabilities are high for the charts to align and take this low. So that would fit nicely with another move to the downside and potentially this wave C. Now, if we're looking at wave C, we want to see an impulsive structure to the downside, which I then counted over here. As you can see, we're looking for a 5-wave move, where then we have a wave 1, 2, impulsive 3, 4, and looking for another impulse to the downside in a wave 5. In this scenario, what would be nice is this wave 3 over here ending below the low to take the liquidity, align all the charts, and then start this wave 4 for then a wave 5 to the downside. Now, if we then zoom in to this wave 3 over here, we want to see a 5-wave structure to the downside, because a wave 1, wave 3 and a wave 5 all should be impulses by themselves. So we are then looking for a 1, 2, 3, 4 and eventually another 5 to be made. Reason for then another wave 5 to the downside also is the volume, because currently this low over here has the highest amount of volume of the trend to the downside, but you want to preferably see another move down in a wave 5 on lower volume. So if we then zoom in to this structure over here and we go to the micro count that I have, we are looking for that wave 5 to the downside. So we then have a wave 1, a very short wave 2, and the reason that we're looking for a longer, more complex wave 4 is because of this wave 2 and the rule of alternation in Elliott waves, which states that if wave 2 is very short and simple, it was a simple zigzag, which is a simple corrective structure, we're looking for a longer and complex wave 4, which is definitely the case at the moment. So that is very nice. Most common target area for wave 5 is between the 1.236 and the 1.618, pulled from the low to the current high that we have of wave 4, which touched the 382 at 26.9k, which, as you can see, has very nice confluence with this low over here, for then potentially the low of a 5, grab the liquidity and then move up for the bigger blue wave 4, for then eventually a wave 5 to the downside, right? Now if we then zoom in to this wave 4 over here, go to the 1 hour, of course, we have been ranging for many days, and the 382 has already been hit once, as you can see over here on the left side. Immediately after this bounce to the upside over here, the 382 was hit at 26.9k, and since that moment we have been ranging down here. Now you can see I have two dotted lines. The first one over here goes to a monthly level that we basically crashed through, but is now important resistance. So if price can make it all the way up here, this is an important resistance area, also inside the target area for a wave 4, for then a rejection and a potential impulsive move to the downside in a wave 5. However, we can also reject over here where I have a target box. So some other confluences as resistance between 26.4k and 26.6k. So this is the first level of interest if price moves to the upside for a potential move down, and the second level of interest for me is going to be that monthly over here. If we then zoom in to this structure over here, then what you want to see for a wave 5 to the downside is an impulse, right? So any of these highs, if we already started a wave 5 down, we are looking for an impulse to the downside, sharp move, impulsive waves to the downside. But as explained in the video yesterday, currently it's difficult to count this as the high for then a 1-2 continuation down in a wave 3, also because we retraced to the 886. Starting an impulse from here to the downside also has its problems because of the like a lot of overlap over here, which doesn't work very nicely. So currently the probabilities are therefore higher to still look to the upside, where we have this resistance area as explained just now, and look at this from an ABC perspective, or at least a 3-wave corrective structure, where an important target for this wave B over here, and therefore wave Y in white, is between the 0.618 and the 1.236. Taking this low over here wouldn't be great, so that's like an invalidation. However, price still moving further to the downside would not be a problem, where we do have a double bottom. So we have a low number 1, low number 2 at the low of the channel as well, for maybe then a wick, grab the liquidity, close above, move to the other side of the channel, right? Trade the range until it breaks, no? But at the highs, we have a triple top, high 1, high 2, high number 3. Very, very attractive indeed. And double bottoms and triple tops, you know, they're magnets for price, right? So we can definitely see these being taken. And above the triple top, what is interesting is that resistance area again that we have over here. So if price can move to the upside, grab the triple top, yeah, we might see a bit of a reaction, but yeah, I'd be looking for that blue resistance area we have over here. And in the middle of the channel, which is interesting, we have this support resistance area, which has been very, very nicely respected indeed throughout this range. And maybe we come back here once more. And if we look at the CVD divergences, then locally we do have some bearish CVD divergences and bullish CVD divergences. Now it's a bit of a mix, because over here, bullish, higher low in price, lower low on the CVD. Where the target is then basically the triple top. Well, over here we also have a bearish CVD divergence. This one is a little bit less powerful in my opinion, as this high had a first divergence, second divergence, and then a third divergence. And the more often you have a divergence with a high, the lower the probabilities of it playing out. But the target of this CVD divergence would be this low over here, which is part of the double bottom. More locally, we over here have a higher low in price, lower low on the CVD. Target is this high, and this little bearish CVD divergence over here already played out. We had a lower high on price, but a higher high over here in blue, as well as on yellow with this little peak. But this already played out, so now the only one left is the more bullish CVD divergence, higher low in price, lower low in yellow. That is the one that we have more locally. And if we zoom out, then you can clearly see over here with this divergence, the first CVD divergence with this high over here, bearish one, was a lower high on price, higher high on the CVD. Then the second was this one, lower high on price, higher high on the CVD. And then later price comes up again, but is still having bearish CVD divergences, as this high over here is still higher than the CVD we got at the price high that we got there. So if I zoom out, you can see also the bullish CVD divergence, higher lows on price, lower lows here on both yellow and blue. So that is what is going on from a CVD perspective. And if we then look at the probabilities of the different scenarios, then on the medium time frame, we are looking for that drop to the downside, right? To finish that wave C, to also take this low, which would be nice eventually. On the low time frame, also looking to finish this wave 3, make another low on lower volume. That is important. We want to see a low, preferably on lower volume. On the micro, we are therefore looking for the beginning of then an impulse to the downside. As long as we don't see an impulse to the downside forming, we are still going to be ranging, and we can still look for upside. And that is then also what the local count is showing, that because we have a lack of impulsivity to the downside, probabilities are higher to move to the upside, eventually take the triple top, look for that blue target box as well. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.